He didn't earn $1 trillion. Nobody earns $1 trillion. He built a machine worth close to $2 trillion and then made sure, legally and structurally, that no shareholder, no board, and no government could take it from him. Level 1, the $22 million exit, 1999. Musk sells his first company, Zip2, to Compaq. His personal cut, around $22 million. He is 27 years old. Most people who receive $22 million at 27 are done. They buy the house, the car, and they coast. Musk bought the car, a McLaren F1. He also did something most people who suddenly get rich never do. He paid attention to what he had just lost. At Zip2, investors had slowly diluted his control. By the end, he wasn't even the CEO anymore. He had built the company. Other people decided what happened to it. He walked away rich. He also walked away with a rule he would never break again. Never lose control of the thing you build. That rule is the staircase. Every level above this one is another step up it. Level 2, the $180 million all-in. He takes the Zip2 money and starts X.com, an online bank. It merges with a competitor and becomes something you might have heard of. PayPal. 2002. eBay buys PayPal for $1.5 billion. Musk is the largest shareholder. His cut, reportedly, around $180 million. This is where a normal person stops playing. Musk takes almost all of it and pours it into two companies that everyone, including people who know a great deal about rockets and cars, tells him are going to fail: SpaceX and Tesla. By 2008, both are nearly dead. SpaceX has failed 3 launches. Tesla is weeks from bankruptcy. Musk is borrowing money to pay rent. He puts his last dollars in anyway. Not because it was safe, because selling would have meant handing the controls to someone else. Level 3, the lottery ticket. 2010. Tesla goes public at $17 a share. The company sells 1 car. It is losing money. On paper, it is a terrible investment. What investors were actually buying was not what Tesla was. They were buying what it might become. Adjusted for 2 stock splits, Tesla's IPO price equates to around $1.13 per share. At the time of filming, Tesla trades at around $400. That is roughly a 300-fold increase. A $10,000 investment at the IPO is today worth, by widely reported calculations, close to $3 million. An equivalent investment in the S&P 500 on the same day would be worth around $57,000. The market is supposed to give you 6 or 8% a year. Tesla gave the people who held on something in the range of 25% compounded every year for 15 years. And this is the level where the word billionaire stops applying to him, because by the end of this decade, it is already too small. Level 4, the empire. By the mid-2020s, Musk controls not one company, but a cluster of them that share resources, share personnel, and increasingly share ownership stakes with each other. Tesla owns shares in SpaceX. SpaceX uses Tesla's engineering talent. Starlink is generating the majority of SpaceX's revenue. And then, in February 2026, he folds his artificial intelligence company, xAI, directly into SpaceX. The combined entity, which includes the X social platform and the Grok AI model, is valued at the time of merger at $1.25 trillion. Starlink was profitable. SpaceX's launch business was profitable. xAI was burning reportedly around $1 billion a month. After the merger, the combined company reported a net loss of approximately $5 billion for 2025. The trillion-dollar valuation is not a reflection of today's profit. It is a bet on what the AI infrastructure becomes worth over the next decade. And this is where most people watching assume the story is finished. The empire is built, the wealth is established, and the rest is just watching the number go up. It is not finished. Because none of what we have described so far was actually irreversible. A bad year, an angry board, enough shareholders. That is how every other company on Earth works. The next two levels are where Musk made sure he is the exception. Level 5. The IPO, June 12, 2026. SpaceX lists on the NASDAQ. The offering, 555 million shares at $135 each. $75 billion raised in a single day, the largest initial public offering in market history. At that price, SpaceX lands at a market value of approximately $1.77 trillion, larger than Tesla, larger than 9 of the 10 most valuable companies on Earth. And the man holding the majority of it crosses a line no human has ever crossed, the world's first trillionaire. The public bought just over 4% of the company. The $75 billion raised is not the story. What was not sold is the story. Level 6. The vote that cannot be overruled. SpaceX operates a dual-class share structure. The public bought Class A shares. One share, one vote. Musk holds the overwhelming majority of Class B shares. One Class B share carries 10 votes. After the IPO, Musk controls approximately 85% of all voting power in the company. This means that every shareholder on Earth, combined, represents the other 15%. It is written directly into the prospectus. Musk cannot be removed as chairman, CEO, or chief technology officer without the approval of Class B shareholders. Since he controls the overwhelming majority of Class B shares, this provision means he cannot be removed without his own consent. Before the IPO, SpaceX reincorporated from Delaware to Texas. The investors who are most sophisticated, the ones managing the retirement savings of millions of teachers and public employees, told SpaceX directly that the governance structure was unacceptable. SpaceX noted the feedback. The structure did not change. The funds bought shares anyway, because at a certain size and a certain growth trajectory, principles become negotiable, and the queue is still very long. This is the level most company founders never reach, not because they don't want to, but because the financial system does not normally allow it. Investors exchange capital for control. The usual deal is that if enough of them are unhappy enough, they can eventually remove you. Musk structured the IPO so that deal does not apply to him. Level 7. The inversion. A 27-year-old pushed out of the company he built. No control over the exit. No say in what happened next. 27 years later, he has built the single largest company that has ever gone public, and written into its governance documents, verified by the SEC, filed in the state of Texas, that the above can never happen again. He built something that compounds whether he is in the room or not, and that legally cannot be taken from him while he is alive. The money is the evidence. The control is the product. Every company he built, every bet he made, every decision to put his last dollar into something that might fail, was not really about getting rich.